Great. Okay, I think we're ready to go. We've hit quorum. So thank you everybody for joining. My name's Shane. I'm the founder of EverVault. We build developer infrastructure for companies to collect, process, and share card data without the PCI headache and to give them control over how they can optimize their payments. So 3D-Secure is a very hot topic for us. We spent a lot of time over the last year or so helping customers shift liability and then also just figure out how to roll out 3D-Secure programs that actually work and both reduce fraud and also optimize payment performance as well. So we have a lot to get through today. The main focus for today is going to be on 3D-Secure in the context of a service provider. We've done a bunch of content in the past for how 3D-Secure can be useful for merchants, including another webinar a couple of months ago, which you can find on our site as well. But yeah, as I mentioned, we're going to focus on kind of a more kind of technical deep dive, especially in the context of some of the changes that Visa have made to their fraud monitoring program recently. And to give you an idea of the agenda today, we're going to talk a bit about VAMP, which is very trendy and ever-changing, how that impacts high-risk merchants and specifically service providers who work with high-risk merchants. We'll do a deep dive into what exactly 3D-Secure is and how it helps, especially in the context of VAMP, as well as some kind of practical field guide tips for how to roll out 3D-Secure as a service provider, as well as some interesting lessons that we've learned from rolling it out over the past couple of years. So to kick things off, Visa have made some changes to what they call the Visa Acquirer Monitoring Program, otherwise known as VAMP, which is basically a penalty program managed by Visa. MasterCard and some of the other schemes do something somewhat similar, but Visa made some pretty, I would say, controversial changes in the past year or so that I think a lot of people are trying to get their heads around. But basically what it does is it penalizes both acquirers as well as merchants via their acquirers for processing basically too many transactions that are either kind of marked as fraudulent or disputed, resulting in chargebacks as well. Traditionally, and we'll dive a bit into how exactly VAMP is calculated and what it's tracking, but to get around this historically, most companies or a lot of more sophisticated companies have used tools like RDR, Rapid Dispute Resolution, as well as CDRN, the Cardholder Dispute Resolution Network, to basically minimize their dispute ratio by proactively solving disputes either before they happen or as they happen. The challenge here is that there's a bunch of different tools that have kind of pros and cons depending on geographic coverage as well as card brand coverage. So RDR is, in my opinion, the coolest tool because it's fully automated and lets you resolve pre-disputes pretty much instantly, including triggering a refund. The big challenge with RDR is it's a Visa product. It only works on Visa branded cards. And for some of the other schemes and other kind of geographies, you'll have to look at tools like Ithoca, which is a manual system that works across Visa and MasterCard, mostly MasterCard actually, but they all have kind of different ratios of card brand coverage. CDRN is also particularly useful, but it's US only and it's kind of cross-brand where you get a small portion of both Visa and MasterCard coverage. So in practice, to do optimization of VAMP, most companies are using a combination of all three of these tools, or they're kind of going through a service provider that focuses on dispute resolution. Businesses like Chargeback Stop and Chargeback.io and so on that basically act as aggregators for all these services from the card networks themselves. So to give you a quick overview of the changes in VAMP, the major change is that the VAMP ratio itself is changing. So simplistically, the VAMP ratio is basically the sum of all fraud reports and disputes divided by the total number of settled card not present transactions that you're processing on either a monthly or a yearly basis. The major changes here are that fraud and dispute flows are in many cases double counted. So there's two different sort of systems under the hood that count for this ratio. And without going into too much detail, one of them is a TC40, which is a notification sent by the issuer to the card network saying that there's an impending dispute for fraud reasons. And then a TC15 is an actual dispute that's initiated for any reason, not just for fraud. So the ratio itself is changing because both of these are now being fully tracked as part of your VAMP ratio, but also the thresholds that the schemes have set for what they call above standard and excessive are changing as well. So there's two different thresholds that are applied both to acquirers and to merchants, as well as some combination of both. But in practice, from June 1st this year, Anybody who's an acquirer with a higher than 0.5% VAMP ratio is considered above standard, at which point later in the year, a fine of $4 per transaction is going to be applied. And then also some higher penalties as well if you exceed 0.7%. So acquirers are just spending a lot of time trying to figure out how to track all of this. Another major change is that on a merchant level, from June 1st this year as well, the thresholds for excessive are also changing. So if you are an individual merchant or you're serving an individual merchant with a greater than 1.5% VAMP ratio, from June 1st next year, the kind of VAMP penalties are going to apply here. So everybody's kind of panicking, trying to figure out, who they can and can't serve. But there's a lot of changes here, and it requires kind of a lot of reading as well. Most of this content is covered in a blog post that we released about a week ago. So there's more detailed tables there, as well as explanations on what exactly every single number means. But this is sort of the context that 3D-Secure can be particularly helpful in. So with a VAMP ratio, the core goal for any business that's doing payment processing is to entirely prevent disputes, which is kind of, it's a harebrained idea, and very few companies are going to get there. But the idea is, can we try to eliminate TC40 fraud reports as much as possible, as well as just a general reduction in disputes for other reason codes. So things like merchandise not received, or any of the kind of fraudulent disputes that a company might file as well. And 3D-Secure isn't the only tool to solve this, but in the context of how you can actually change your infrastructure to directly address this as a service provider, we think it's a pretty good one. And so obviously these ratios apply to everybody who's processing transactions on the Visa network, but it's going to particularly impact businesses that are serving merchants that are considered high risk. High risk means a lot of different things to different businesses. Some people consider it based on merchant category code. Others consider it based on just historical data of what the disputes and chargebacks look like. But the upshot of that is that acquirers are going to be penalized for having high-risk merchants on their book. And as a result, keeping the VAMP ratio below 0.7% or even 0.5% is going to be key. Some acquirers are totally fine with this, and they're kind of happy with the composition of the merchants that they're serving. But others have been kind of making some drastic changes. A lot of businesses would have dealt with experiences where their acquirer is effectively shutting down their merchant account because, from a fraud perspective, they just can't serve them anymore. Some acquirers are going to be totally fine with this just because they've kind of kept a good balance of high risk and low risk merchants on their books. But there's kind of a great level of cleaning up, I would say, that is going to cause a lot of fragmentation and people moving acquirers over the next year or so. And I think businesses that are handling chargebacks traditionally are going to have a really hard time with this. One of the major changes with VAMP, or just the VAMP program in general, is that what a lot of companies have been doing, especially with tools like LLMs and generative AI becoming more popular, is that they get really good at winning disputes, where they can gather all the evidence, create the 12-page PDF that gets shared with the issuer, the card network, and that's super useful from a financial perspective because you're kind of covering yourself financially. But the sad part is that's going to have no impact on your VAMP ratio. So even if you win 100% of your chargebacks, the fact that they exist in the first place is going to count in your VAMP ratio, and as a result, you're going to experience penalties as well. Especially for fraudulent payments, which are double counted, because initially there's a TC40 to say that there's an impending dispute for fraud reasons, but that also gets followed by the full TC15, which is the dispute itself. And the reality is most merchants aren't equipped to solve this themselves. Only the most sophisticated and the largest merchants have the technical or kind of payments resources to solve this in-house. And as a result, it mostly falls on the service providers, which is most of the people attending this webinar, to solve all these problems for them as well. The upshot of this for pretty much everybody that's here is that there's a very big opportunity for service providers to underwrite these merchants if they get really good at both risk management, but also using technical solutions to keep those VAMP ratios really low. Typically, these businesses or service providers that are serving high-risk merchants have better margins because they're taking on more risk, and in exchange for actually working with these merchants in the first place, they're going to have a better business. But typically, the kind of traditional approach of moving acquirers because you're getting better or you're getting better processing fees. That's no longer true, because as a merchant, you want to work with an acquirer that's actually going to keep your business on the books for as long as possible. And also because tools like orchestration and token vaulting are making switching service providers much easier than they were before. Service providers also need to build sticky products that actually address a lot of the issues beyond just how do we process a payment with the lowest processing fees. So this is a good segue into what 3D-Secure is, and then also how it works under the hood as well. So I'm assuming that everybody has sort of a baseline understanding of 3D-Secure, what it looks like from a user experience perspective. But I think firstly, it makes sense to draw a distinction between authentication and authorization, which a lot of businesses, I would say, mistakenly use interchangeably. As part of a payment flow, especially with cards, they're two totally distinct steps, and they do two totally different things. So payment authentication is what we're mostly focusing on here, and that verifies that a buyer is who they say they are. So they prove that they actually are the card holder and they're the one making the purchase based on, in the context of 3D-Secure, something they know, something they have, or something that they are. Payment authorization then is the one that I think most companies in the payment flow are focusing most of their efforts on. And that verifies that the card that is being used is authorized to make a particular payment. In other words, do they have a high enough credit limit? Does the transaction look fraudulent? And then whatever other rules that an issuer wants to put in place to basically verify whether you should authorize or not authorize a payment. There's a few different ways of doing payment authentication, but 3D-Secure is, I would say, the most standard. It's pretty much universal. Most issuers, pretty much all issuers in most developed markets support 3D-Secure. And the great thing about it from a VAMP perspective is that they minimize fraud disputes at the source, because you get a better guarantee that the person that's making a payment is who they say they are. And you're more likely to see a huge reduction in TC15s on TC40s because you're going to get fewer disputes for people saying that they didn't make the payment. In the context of VAMP, it doesn't fully solve friendly fraud, where a business is or a consumer has made a purchase and they just think that saying they didn't make the payment is the best way to basically get their money back. But it certainly goes a long way, especially when it's bundled with a bunch of other tools like RDR and CDRN as well. How 3D-Secure works under the hood is there's basically three different domains within 3D-Secure. That's why it's called 3D. There's the merchant who uses a tool called the 3DS server. So that's what we build. That's what a lot of processors and payment gateways would offer. There's the directory server, which is basically just the card network's 3D-Secure server that does all the writing. And then there's the issuing bank's ACS, access control server. So 3D-Secure is a protocol that allows all three of these entities to exchange information about a transaction and about a cardholder, ultimately to get either a full authentication or a rejection, saying that the payment isn't authenticated. In theory, this could be done directly between the issuing bank and the cardholder, but in practice, because the cardholder is on a merchant site and having a customer open up their banking app to authenticate themselves proactively, like you would do with something like open banking, just doesn't work because it introduces a lot of friction, and then you're going to see massive drops in conversion rate and so on. But 3D-Secure itself is a semi-open standard. It's governed by EMVCo, who are kind of a consortium of all the card networks that create standards for things like 3D-Secure, the original EMV protocol from many decades ago now for basically chip and pin, as well as other things like token service providers and so on. So it's regulated is maybe the wrong word, but it's pretty heavily guardrailed, where it's not just like an open API that anybody can get easy access to. The nice thing about 3D-Secure is once you have a successful 3DS authentication, you get many dozens of fields back, but the two that are most relevant for the subsequent payment authorization are what's called the ECI, Electronic Commerce Indicator. There's basically a 2-digit code that shows the status of the authentication itself. It's either 02 or 05, depending on the card brand, for a successful 3DS auth. And then there's a bunch of other combinations as well that can be quite difficult to decipher. But just remember 05 and 02 equals success. You also get what's called the UCAF, Universal Cardholder Authentication field, which is obviously too long for for people to say out loud on a regular basis. So most people call this the cryptogram. And these are basically the two values that you would use to pass downstream to process the payment or do payment authorization. When these values are present with a 0.5 or 0.2 ECI, the liability for chargebacks is shifted in most cases, and I'll cover some of the exceptions shortly. But it's only shifted for fraud reason codes. So kind of the 10.x dispute reasons with Visa, they all get covered. Other dispute reasons like merchandise not received or goods not as described or something similar, they unfortunately don't get covered by 3D-Secure, or well, fortunately for cardholders. But you can assume that your chargeback rates get slashed by something like 20 or 30%, which is sort of the average proportion of fraud reason codes divided by the total number of chargeback reason codes that happen on a given time frame. There are some exceptions to the liability shift where there's particular merchant category codes like betting and money orders that are not covered by the liability shift. But thankfully, for most high-risk merchants, they don't necessarily fall into these MCCs. And as a result, you still get the liability shift. One thing to clarify is that the liability shift is a financial liability shift. It doesn't necessarily prevent the issuer from filing a TC40, but it makes it far less likely that it happens in the first place, because either the issuer knows that there's no point in them filing the TC40 and they're going to be on the hook for the chargeback anyway, so you get a reduction from that. But also true fraud, where someone is legitimately using a stolen card or something similar, that's pretty much eliminated because you wouldn't have processed the transaction in the first place if authentication failed. So segueing into how 3D-Secure should actually be implemented by processors and service providers, or PayFacaaS or payment gateways, however you kind of identify your business. There's a bunch of interesting things that we've uncovered that I think are worth running through. So separately to merchants, as I mentioned, if you get a 0.5 or 0.2 ECI back from the ACS, you can assume that the chargeback liability should be shifted. And there's a reason "should" is italicized here, because it's not always that simple. There's a bunch of instances where after payment authorization, you've got a successful 3DS authentication, you've passed all the data. As part of the response to the authorization request, you get two fields back. Each of the card brands handle it slightly differently. Visa give you a CAVV results code. MasterCard give you a UCAF collection downgrade indicator. But these are basically two values that you get back after processing the payment that show whether the issuing bank actually respected the liability shift. So most of the time, I don't have kind of firm data on it, but in 90% plus of cases where you do pass valid 3DS data, you'll get kind of valid CAVV results codes or UCAF collection downgrade indicators. But you have to keep a very close eye on this. And if you're a service provider that's interacting directly with, I would say, a low-level processor that gives you access to this data, it's definitely worth tracking to see what proportion of successful 3DS authentications actually lead to the liability shift. Because in theory, the issuers are meant to respect it, but there's a lot of issues where issuers just decide for arbitrary reasons that the liability shouldn't be shifted for the payment. And in a lot of cases, this just comes down to misconfiguration, where if the issuer is requesting or is receiving something like the 3DS transaction ID, and you pass in the ACS or the directory server transaction ID rather than the access control server transaction ID, there's just issues reconciling that on their side, and as a result, they downgrade the payment. The second thing is, this is probably the one that we feel most passionate about because we just see it every day. A lot of processors and service providers that expose 3DS don't treat it as a core part of the product, especially outside of Europe, where in Europe, 3DS is effectively mandated. As a result, it's a core part of the product and is required on pretty much every payment. So they tend to abstract it pretty well. But in a lot of cases, especially in the US and other markets, 3DS is sort of seen as a bolt-on where they'll partner with a legacy provider. They'll just have a classic referral agreement or something similar. And then as a result, the merchants that you're serving who might have really competent engineering teams, but they're just not domain experts in payment authentication, they're expected to basically implement the entire 3DS protocol themselves. So they're filling out an authentication request with dozens, in most cases, potentially even 60 or 70 different fields. and they're passing that complexity onto the merchant. In practice, this is a really, really bad idea because merchants get confused, they do it incorrectly, they have a worse experience with their product, and as a result, in many cases, they're just more inclined to actually skip 3DS entirely. So in the code block on the right, you'll see an example where what you should be handling behind the scenes is completing that full AREC, connecting directly with the 3DS server. But from a merchant's perspective, all they really care about is they want to authenticate a payment for $100 with this particular card, and all of the complexity should be handled by you as a service provider. And so few companies, aside from, I'd say, the more modern payment service providers, actually handle this abstraction for you. But keeping a very close eye on this is just so important because bad implementations are extremely common, especially when you've got kind of maybe a non-standard flow where you're requesting an exemption or something similar. So really just keep a close eye on how you can minimize the learning curve, especially with fingerprinting and challenge step-ups, because the 3DS protocol is implemented in a way where there are two distinct steps. You get the method URL back from I guess the issuer via the directory server via the 3DS server, and you just pass it on to your merchant where they have to create an iframe in the checkout page. It's just messy. The user gets redirected and so on. And then if it gets challenged, you have to do the whole thing all over again. So that's not necessary, especially with modern JavaScript and browsers where you can just handle all of this for a user inside a single modal or iframe or something similar, which is how we focus on abstracting away the user experience pain. Kind of 4 specific things to call out that, aside from just completing the AREC, you should be doing. Acquirer bin and merchant ID are necessary fields as part of 3DS authentication. Merchants struggle massively to get access to this data from their processors and acquirers. Typically, it can take weeks of back and forth with the acquiring bank to figure out what the specific acquirer bin is for each network. In most cases, if you're working with 1 or 2 PSPs, you should just have this on file. The acquirer bin doesn't change depending on who the merchant is. The only thing that changes is the merchant ID. And then there's some kind of enrollment steps that MasterCard have, for example, where a 3DS, a merchant ID needs to be enrolled for a specific acquirer bin before 3DS is successful. They have released an announcement saying that that's being phased out. Initially, the date, I think, was sometime in July or maybe early August, but they've deferred that to September, October. So it's still TBD on whether that enrollment step is removed, but you should be handling this on behalf of your merchants. One thing to call out on the acquirer bin as well is that it should match the bin that's actually used for the payment authorization, but in practice, that's actually not a hard requirement. There's some nuance around how billing gets managed for 3DS, where specifically within the EU and the UK as well, 3DS processing fees or 3DS network fees are what's called non-transactional, where on a monthly basis, they get reported to the acquiring bank. And regardless of who actually authorizes the payment under the hood, the acquirer bin that was used for 3DS is the one that gets billed. Whereas outside of the EU and the UK, the acquirer bin is where the 3DS scheme fees are transactional. So they get included as part of the standard deductions for interchange fees, scheme fees, and so on. So the acquirer bin that you provide for 3DS in the US, for example, is pretty inconsequential from a processing perspective, assuming that you're working with US acquirers. The 3 other things I think are more or a bit less confusing. Merchant category code. Very few people know off the top of their head what their merchant category code is. Typically, they're poking around their dashboard or their merchant agreement to get access to this. You as a service provider should know this already and handle all of that for them. And then 2 3DS protocol specific things that you need to be very careful about kind of passing on to customers are device fingerprinting. So like I mentioned before with the method URL, make sure you're handling all of that for them, as well as transaction context. So that's things like whether it's recurring authentication, what the payment type is, what the channel is. You very quickly end up in a rabbit hole of dozens of kind of 2-digit codes that are used to represent something that should be represented in English, but no merchant wants to be dealing with this. So make sure you abstract that as much as you possibly can. Before doing 3DS, there's also some things that we've seen, I would say the more sophisticated service providers do that are hugely impactful on both 3DS success rate, but also just ultimate payment performance. The first is data enrichment. So the card networks and the issuers all offer a bunch of other products that don't necessarily give you the liability shift, but they give you great intelligence into fraud signals in a first-party way for that card. So for example, AVS, address validation or verification service, can be used to basically verify, is the card or is the address that the issuer has on file for this card the one that matches the billing address that the customer provided at checkout. Account name indicator, which is a layer on top of AVS that verifies that the name that the customer provided is the name that matches the card. And this is particularly useful for high-risk industries where the user is KYC'd. So they might have provided their passport or driver's license, with a reasonable degree of certainty that this is their legitimate name. But if they try to do a payment using a card that doesn't belong to them, in most cases, you should have at the very least included as a very major weighting in your fraud model as well. And then finally, enhanced bin data. So basically seeing, is this an issuer or is this a particular bin that has been subject to bin testing attacks in the recent days or weeks or months or whatever it is? Is it a known high-risk bank? Is the card gambling blocked? Is the card eligible for 3DS? All this sort of stuff as well. The second kind of major thing that sophisticated service providers tend to do is 3DS data only, which is a pretty new flow as part of 3DS. It's not implemented particularly commonly by anybody, I would say. But what it allows you to do is, with a similar payload that you'll be using for the actual 3DS, you can perform a data-only flow, which is, you can think of it kind of as like a theoretical 3DS, where, hypothetically, if I was to authenticate this payment, what would you say? And for companies that are particularly concerned about friction and conversion rates, if you use 3DS data only, you can get a very good indication on whether this transaction is worth pursuing. You unfortunately don't get the liability shift with 3DS data only, but it's all included in the standard protocol spec. And at the very least, it should be another signal that's passed into your fraud models as well. And then finally, smart challenge strategies. So basically, you can trigger 3DS, but if you implement 3DS, I would say in a kind of technically sophisticated way, you have the flexibility to decide whether to attempt frictionless. If frictionless gets stepped up to a challenge, you have the ability to decide whether or not that happens. So our general recommendation would be, in the EU, always complete challenges. It's a regulatory requirement under SCA. But in the US, you can consider doing things like fail on challenge. So if it's a low value, high volume merchant, it might be worth just taking on some portion of risk, where, especially in the US, where you have extremely high rates of frictionless authentications, it's totally worth doing that as well, because the 20% or so of challenges or of authentications that do get challenged, you might be happy to take on the chargeback risk there, because with frictionless 3DS, even though the user wasn't actually challenged, if it's successful, you get a full liability shift, which is very, very nice. And then finally, high risk. If something is seemingly high risk, it's a brand new customer, or it's a high value transaction or something similar, attempt frictionless and then still just complete the challenge. $50 is maybe a low threshold depending on the type of merchant, but certainly for anything over $500, you should be completing the full challenge flow. And if the challenge fails, it's worth considering pretty strongly whether or not you should even accept that payment in the first place. Shifting on to kind of some of the, I would say, the cooler, more niche features of 3DS that honestly very few people use. 3DS has a flow called requester initiated. And I think a lot of the misconceptions that people have about 3D-Secure are that there's always a challenge and the user always has to be in the loop. 3DS requester initiated was released in 3DS version 2.1. And basically what it allows you to do is it's effectively a merchant initiated 3DS, where if you're a recurring business or maybe a split shipment type business where you want to get the liability shift, but the user isn't necessarily on a checkout page at that point in time. If you've already processed a payment using that card in the past and you want to process a subsequent transaction, you can pass in a reference to the initial standard 3DS authentication that was completed, and then ask the issuer for another subsequent 3DS authentication, which very thankfully also offers the full liability shift as well. Very few people use it. It's poorly documented. Most PSPs don't even expose the functionality. But as a service provider, if you're going straight to a 3DS server, it's kind of a no-brainer because you get the liability shift, and there's no impact at all on conversion because it all just happens under the hood, which is very nice. And if you're a service provider who is handling this on behalf of merchants, your merchants don't need to change anything because you already have the initial 3DS authentication. As long as you store a reference to that authentication on your side for any subsequent payments using that card, you can just map it back to the original 3DS authentication and get the full liability shift, which is great from a financial liability perspective, but also is going to help with VAMP and just keeping those ratios low as well. One kind of major point outside of the EU where, as I mentioned before, you do have to complete the challenge just for regulatory reasons with SCA. If you use simple rules where a failed 3DS is a failed payment, you have to be very conscious of the impact that that's going to have on your merchants and their business performance as well. These thresholds below are kind of loosely what we've seen across the data from the merchants and service providers that we work with, but below $50, generally you should be okay kind of eating the chargeback risk on that. Maximizing for frictionless and potentially failing on challenge is a good idea. 50 to 500 is kind of the spot where it's the hardest because you need to have really good kind of risk scoring to decide if you have a failed 3DS authentication, should I process this payment in the first place? $500 plus is when chargebacks start to become quite painful, especially if it's a high value, high volume merchant. But it's worth always authenticating for those. And one very strange thing is issuer behavior above $5,000 is extremely unpredictable. It's almost like some of their access control servers have hard rules where above that sort of threshold, just run logic that's wildly unpredictable, where in a lot of cases you'll just get failed 3DSs, or if the 3DS is successful and the user was challenged, you can see a massive drop off in authorization success rate after that. So it's my suspicion is they just don't want to take on the chargeback liability for a payment that big. So they'd rather just not take the payment in the first place, even if it's been authenticated. But that behavior isn't necessarily as common in the EU. So it could just be a matter of time before the two markets kind of converge and implement the same behavior. I kind of wanted to have one slide which would kind of cover tactical points that you can just kind of take away and screenshot. So multi-layered defense, as with everything fraud related, is always the best way of going about keeping fraud rates low. So we've kind of distilled it down to 4 different points that you should keep in mind. And ideally, this is a checklist that you can kind of just take back. Hopefully, a lot of you are already implementing some of these tactics anyway, but these are kind of the 4 things that you need to keep in mind to keep VAMP ratios low and avoid those fines of $4 per dispute for an acquirer or $8 for a merchant. And the first is implementing pre-authentication fraud signals. So AVS and ANI, like I mentioned before, as well as 3D-Secure data only. So even before you attempt the authentication, you have full flexibility and visibility into whether or not you should perform or process the payment in the first place. The second is actually do the authentication and shift the liability. It's not going to block TC40s and TC15s, unfortunately, but it does greatly reduce them because the issuer is less likely to even bother, frankly, because they know they're on the hook for it anyway. And it also reduces cases of true fraud where the authentication gets stepped up to a challenge, and then the challenge obviously fails because the cardholder can't authenticate themselves because it's a stolen card. RDR and CDRN are still very important tools. One thing I should have called out is that earlier in the year, the guidance on the VAMP changes was that even disputes solved using RDR and CDRN counted towards your VAMP ratio. Like with a lot of these changes from the card networks, there's controversy. They kind of roll back some of them and then kind of keep the others. But on May 20th, Visa announced that RDR and CDRN resolved disputes are excluded from the VAMP ratio again. So that's good news for anybody that kind of relied on proactively resolving disputes in the kind of first 24 or 48 hours of the kind of pre-dispute window. They're still great tools. You should still use them if they make sense for your business, because if you've low transaction sizes, the $15 or so, or maybe even more for Verify, Ithoca, and all these other services can be quite costly and maybe not worth it. And then finally, compelling evidence, specifically compelling evidence 3. It's a very interesting, I would say, exemption for chargeback ratios, where there's a specific set of rules where simplistically, if you can demonstrate 2 historical transactions for that cardholder that were undisputed with 2 common data attributes, so shipping address, IP address, maybe you do browser fingerprinting or something similar, you can basically file that evidence as part of a compelling evidence claim. And then the TC40 is effectively deleted, or I don't know if it's actually deleted under the hood, but it certainly doesn't count towards your VAMP ratio, and you can effectively discard it from the VAMP calculations as well. So it's very valuable, but it's a lot of work because you have to implement really, really good browser tracking. And just like having the data structure in place where your fraud team or your dispute team can pull this evidence really quickly, file the CE3 claim, and kind of fight the ratio that way. Kind of getting towards the end here on the kind of, I guess, practical top tip side, there's some tidbits that I think are worth sharing just about how companies implement 3D-Secure incorrectly. And separate to kind of incorrect implementations, there are drawbacks to 3D-Secure. Some of them people are very aware of. It hits conversion rates, especially in markets where it's not as common like the US. But the good news is not as much as you might think. And a lot of the data online about conversion rate impact of 3DS is dated. Every year it gets better and better as more issuers support it, more processors support it, and therefore consumers are just more experienced with dealing with 3DS. In the US, though, 3DS is in and of itself seen as a fraud signal. Stripe, about a year, maybe 2 years ago, released a very interesting research piece on their data, where you can see in this graph on the right, in the US, there's kind of no correlation between whether authentication was successful and whether authorization will be successful, which is sort of counterintuitive. And a lot of it is just down to how kind of, I guess, inconsistent the fraud modeling behavior is on the bank side. But then you look at a market like the UK, and this is true of other countries in the EU as well, where the higher the authentication success rate is, the higher the authorization success rate is. So the bet is that the US and other markets where 3DS is less common will kind of converge on this level, but it's not there quite yet. The good news is if 3DS is challenged, even in the US, Stripe claimed that there's kind of no impact on authorization conversion rate. We've seen an ever so slight increase in authorization success rate if you have a successful challenged 3DS authentication. But again, hopefully this just sort of converges over time and we end up with a much more predictable graph where more authentication is just better and leads to more authorization success. The second is, if you are rolling out 3DS to your merchants, just be prepared for a pretty major support burden. If you're kind of exposing 3DS as a separate feature on your API, customers will have questions. People are, I think, people look very closely at payment authorization success, and they might file a support ticket if they're trying to understand why a particular payment failed. With authentication, you just compound that because, especially in the US, authentication behavior is just far less predictable. So sophisticated merchants have pretty high demands. In our case, we deal with many, many support tickets from customers that are kind of curious about why an authentication failed. And in many cases, we can give them good insight there, but in other cases, you're kind of looking into a black box and trying to figure out, was the issuer down? Was their ACS behaving kind of weirdly? So that's kind of going back to the point about abstraction and keeping that simplicity away from your customers. We're passing the simplicity onto your customers. Just be prepared for a support burden if you kind of expose too much of the 3DS meat to them. I sort of alluded to it a couple of times throughout the presentation, but frictionless or fail is a super powerful way of doing 3DS outside of markets where it's not mandated. Very few people do this. They just assume that 3DS is a kind of an end-to-end process where if it gets challenged, you have to complete the challenge. In many cases, if you complete a 3DS authentication, you try frictionless, and then if it gets stepped up to a challenge, you just kind of cancel the session. What we found is that in a lot of cases, the ACS from the issuer isn't necessarily connected to the kind of core banking infrastructure. So you can basically try to process the transaction as normal. You won't get the liability shift, but it has very little impact, if any, on the actual authorization success rate. So if your authentication gets stepped up to a challenge, that doesn't actually mean that you can't take the payment in a lot of cases. And then you should just factor in the kind of loose thresholds of when it makes sense to step up to a full challenge and when it makes sense to just continue with the payment as normal based on the kind of dollar amount of the transaction. Logging is a very, very big thing that I think a lot of providers get wrong, where, as I mentioned, the 3DS authentication request has dozens of fields. There's a bunch of other steps. There's the authentication request, the challenge request, other data that you get back from the card brands like the PREC and PRES. And very few companies log any of this, or if they do, they certainly don't expose it to their customers. And because there's so many distinct steps, authentication can fail at a bunch of different steps. Maybe it fails at fingerprinting, maybe it fails at the challenge, or maybe it fails after the challenge, where you're just trying to get the cryptogram and the authentication response back. Logging each of those individual steps is just super important, because you can then kind of turn that into a product, offer a lot more intelligence to your merchants, and then optimize your 3DS performance over time as well. Implementing 3DS, then there's kind of three classic ways that you can kind of approach the problem. The first is the most technically interesting, and I think a lot of service providers who have very strong engineering cultures want to do it this way, which is building your own 3D-Secure server. It's definitely not for the faint of heart, but there's a lot of advantages to it as well. So it does take about 18 months to go through the full process of building the 3DS server, going to a testing lab, getting that certified, getting a letter of approval from EMVCo, then doing network certifications and integrations. So it's a very long process. Typically, it'll cost something like $500K to $1 million in development, as well as about $150K a year in ongoing maintenance, setting aside kind of feature improvements. That's just to keep the thing working. The nice advantage of it is for very, very high volume 3DS servers or just service providers. There's not really any costs for authentications, at least from a software perspective. The acquirer might have to pay fees in certain cases, like I mentioned before. But just be wary. It's not like implementing another API where you just get access to a sandbox, you turn on production. It's a very lengthy process that is only about 30% writing code, and the remaining 70% is shepherding each of the card networks, because they have to be implemented totally separately, and they have different processes for how that gets managed. The second is partnering with a 3D-Secure server provider. So typically this is pretty fast, about 2 to 3 weeks. They handle all the certification, maintenance, all the kind of hard network stuff. But they also give you pretty much the same level of control as you would have building your own 3D-Secure server. So you get the full context of the authentication response. You can get full granularity over what parameters you pass to the directory server downstream. And it's a really nice kind of middle ground between building your own or using something from a PSP. So that's what we offer. Obviously, we're biased. We think it's the best way of doing things, but it's a very nice middle ground where until you're doing maybe hundreds of millions of 3DS authentications a year, it kind of buys you time to maybe consider whether or not you want to build your own 3DS server. And one thing to flag is there's only about 100 EMVCo licensed 3DS servers in total. Most of those are built by individual PSPs or acquirers. And there's only a small handful, maybe half a dozen companies that kind of offer a 3DS server as its own standalone service. And then the third is, I would say, the most common. I think this is the way most companies end up building, where they partner with an acquirer. Maybe the acquirer has a preferred vendor like a Cardinal Commerce or something similar, or maybe they have their own. So you can, in many cases, just turn it on by flicking a switch. The drawbacks here are if you have more than one acquirer or PSP under the hood, you end up re-implementing pretty much all of the 3DS flow for each individual acquirer, and that's very painful. You also lack a lot of kind of control and visibility because each of the acquirers behave very, very differently, or each of the 3DS providers behave very differently, especially when it comes to when 3DS should be triggered. If you manage 3DS yourself, you can decide to trigger 3DS authentication on any transaction you want or all transactions, whereas a PSP's they kind of behave very differently, and you don't necessarily have the flexibility. From a cost perspective, it's about the same, and it is probably the best path for companies that are maybe smaller, working with one PSP. They don't have the technical resources, and they see 3DS as a checkbox, which in a lot of cases it is. But this is, maybe the simplest way forward to get up and running with 3DS, kind of as a V1 or V0.1. So that's sort of the end of, I would say, the high level insights that we've kind of learned over the past couple of years. I know there's quite a lot of questions in chat, but if anybody has anything else, feel free to shoot, and I'll either I or someone else in the team will get working through those. I see Trevor asked why choose standalone 3DS versus one from an acquirer. I think, like I mentioned, one of the main things is just control and consistency of behavior. You can optimize 3DS yourself, especially if you're a service provider and you see, like if you kind of see the full transaction lifecycle and you've sophisticated engineering teams, you want to basically have access to all that data and trigger 3DS based on your own data. Whereas with an acquirer, you don't necessarily get that flexibility. And then also the client side part of 3DS. So doing the method URL fingerprinting, doing the challenge step up, that's all handled totally differently based on which acquirer you're using. And if you end up implementing multiple different flows, it's just really hard to abstract that into a simple SDK that kind of most service providers aspire to do. I see there's another question from Drew about would using 3RI cause similar approval rate issues in the US, given US issuers tend to decline 3DS transactions? Yes is the short answer. 3RI does have a much, much lower authentication success rate. It's sort of 60, 70%, depending on market and transaction size and so on. So you're in no way guaranteed that you will get a successful 3RI authentication. The big upside, though, is that it's not blocking at all, because it's all happening under the hood. There's no user involvement, so you don't have to worry about the impact on conversion rate. And as a result, 3RI should be seen more like a cherry on top, where for basically no cost aside from maybe the 3DS server fee, you can shift liability for that transaction with pretty much no impact as well. On the side of authorization success rate, though, it's about the same. So if you've got a successful 3RI authentication and a successful kind of challenge 3DS authentication, the impact on authorization rate is pretty negligible. We haven't seen anything material in difference on authorization success rate there. Sebastian has a question about, if you process recurring transactions, would you recommend sending the ECI and UCAF on recurring transactions? And if it fails, then try processing it as a raw transaction with no reference to the initial. So typically, if you trigger a 3DS authentication, you can pass in a preference for whether it's a recurring authentication mandate or not. The important thing, though, is the ECI and the cryptogram that you get back from that initial authentication isn't meant to be reused. So in theory and in practice, a cryptogram can be reused up to 5 times, but it's not designed to be used up to 5 times for kind of independent transactions. So that's where 3RI comes into play. Ideally, once you have a successful payment authorization using a particular set of ECI and cryptogram values, you should discard the cryptogram. And in fact, you have to under PCI. It's considered sensitive authentication data. So you can only use those once. But if you have, if you already have the data from the initial 3DS authentication itself, you just trigger a 3RI and you're more likely to get an authentication success. Another question from Drew is, do EU issuers make different decisions on US-based merchants versus EU-based merchants? And the short answer is it depends. Substantively, I think a lot of the issues around payment authorization, for example, a US card being used with a European merchant, are just around fraud. So the issuer is just more likely to block the payment using a do not honor or maybe a fraud response code because, for example, if it's a card not present transaction in France, a US card holder that makes most of their transactions there, it's just more likely to trigger a fraud response from them. There's also issues with FX rates as well, where once you include kind of variable FX rates as part of the payment authorization, there's just another system in the loop and more issues can go wrong. But yeah, it's kind of it's more complicated for sure to process a US card in Europe. But in terms of the kind of quantitative side, it's a couple of percent. It's not like a 20% drop off or anything, as long as the behavior doesn't trigger a fraud rule from the issuer as part of the payment authorization. Another question on, are we seeing significant approval rate uplift on data-only transactions? So it depends what you mean. If you're talking about the payment authorization after performing data only, typically you don't get an approval rate increase or an authorization rate increase as part of data only. You might get something small, but it has pretty much no impact on the payment itself. It just gives you an indication on whether the issuer thinks that this is a transaction that's high risk or not. Some of the more sophisticated issuers who have pretty closely linked core banking and ACS servers might actually look at that, where they've gathered browser fingerprint data. They're more likely to authorize the transaction. But relative to a frictionless 3DS authentication, you would see a slight increase because with data only, they get all the information about the kind of fraud score of the transaction, but they don't have to take on any financial liability or extra financial liability because they're not taking on the chargeback risks. I think we're kind of getting close to the end of the questions here. I see some of them have been answered asynchronously by Jake, so thanks for that. We will be sharing a recording of this webinar with everybody, so you should get an email in the next day or so with a link to the recording. Feel free to share it with your teams, and if you have any questions, feel free to get in contact with me directly. I'm just Shane@evervault.com. Pretty easy to find, and I see some of you have requested a call afterwards as well. But thank you everybody for joining. We do a webinar like this every kind of couple of months or so. So we'll have another one coming up pretty soon, and we'll kind of keep you posted on that as well. But yeah, if anybody has any questions, just let me know. And otherwise, enjoy the rest of your day. It was great to have you all here.